I like Amazon for not so much on the consumer side, but just in terms of Amazon Web Service. As you know, that's their infrastructure as a service, cloud play. That's a very successful company in terms of within a bigger company. They generate about 82% of operating profit for Amazon as a whole, and the overall margins are around 26%. They're growing at a rate of about 45%. So they're kind of head and shoulders right now over Microsoft with Azure and some of the other players out there, Google, GCP, cloud platform. So overall, even though we think of Amazon as this big retail player, we think of them as getting involved in healthcare and credit cards and entertainment, everything. The reason that we like the stock, or one of the reasons, is because of the fact they're such a dominant player in the cloud space, and that's got tremendous growth potential. So
is it fair to say that that thesis holds, that you'd be looking at technology names that aren't leveraged to the consumer?
Well, yeah, I mean, I tend to gear a little bit more towards the enterprise. Some of the other stocks that I wanted to talk about were Applied Materials and Microsoft. Those are also companies that are very enterprise focused. Probably gear more towards that than, let's say, Dropbox, which I believe is going public today. You had, Snap, some of these other companies that are really kind of driven more by the consumer. So kind of more focused a little bit in terms of the corporate IT side.
Dan, I do see, still have a holding in Facebook. I wonder how you think about the stock right now. Obviously, it's kind of was overloved and overowned maybe at some point, been pulling back sharply. It's pretty close to, I guess, some recent lows from last year. I do wonder, though, I mean, it's on a forward PE basis. It's as cheap as it's ever been just about right now. So I wonder if you think those earnings are going to hold up, or if we're going to have to, be downgrading exactly what the company can earn based on a lot of the efforts they're going to have to make to rectify things.
Well, that's $1 million question. I mean, consensus is $7.25 a share. As you mentioned, that's about an 18 multiple on forward earnings, very low from a historical perspective. For me, we can get into all the debate in terms of did they violate and this and that, but it's really going to come down to two things in terms of, are we going to see a slowdown in terms of user growth, which has been very strong, 2 billion plus, and are we going to see some sort of change up in engagements? And then you start to look at, well, are these advertisers who have been committing money, mostly to Google and Facebook, where they start maybe moving some funds over to Amazon? And we just don't know what that reaction is going to be at this point. We know they're going to be in the limelight, as you guys have been talking about, congressionally speaking and everything else. So is that 725 going to hold? We're just going to have to see. At this point, there's been no changes, but we just have to see if those things change and then how do advertisers react. And then the whole preface changes in terms of Facebook. So it's $1 million question. But we hold shares, and we've owned it at a very low cost basis. So we'll continue to hold at this point, kind of let it play out.
You're not buying at this point. You are holding.
We're just going to hold on that right now. They're just, Becky, as you know, every day on CNBC and on everywhere you go, it's just everywhere negative articles, and you have congressmen who want to haul them in front of committees, and it's just going to be really hard for Facebook to kind of sweat that off initially. But we'll hold it and see what happens.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.